Okay, this is a quick recap video for a friend on the Discord group. Just something I've noticed that has helped me to avoid some losing trades. Something I'm still working on. It's a bit discretionary, I guess, so it might be hard to define, but I feel it's helped me. Now, this was the trade. It was a long NQ. Let's mark the area quickly. Here was the FVG. There we had the breaker structure, and we came back down, and then this was the entry candle. Now, this would be a fairly decent looking setup, not too big an entry candle. Now on the empty chart, it looks all right. However, I have this tool on my chart, the anchored volume profile. I keep that anchored to, it's got an anchored, it does anything now. I keep that anchored to the opening of the NASDAQ, which would be 8:30 Eastern Standard Time, so 15:30 my time. Now this, if you're not familiar with it, the volume profile gives an indication of the amount of volume traded at each price up and down the entire day's trading. So this would be a representative of all the volumes traded during the regular trading hour session since it opened. Now, these here indicate obviously high volumes with lots of trading's taken place, and this red line is what they call the point of control. It's the point where the most volume traded during the time period. Now, the high volume areas, and especially the point of control, they tend to act as levels of support and resistance, or at least not so much support and resistance, but an area where the price can get stuck and can potentially chop for a long time, chop around. So when I was actually looking at your trade, I noticed this, that you traded directly into this high volume area that was relatively high volume in the sense that it was about the same as the rest of the day and nearly as the same as the highest peak of the day. Then I did this, and this is something I've noticed about the TTM trades that tend to fail. One of the things I noticed about failed trades, if you take a fixed range volume profile and I attach it to this little range before your entry. Now, you were correct, I think, in that you said that the trend wasn't as strong, but I think that's one of the drawbacks of TTM, is that we need this structure to do our trade, or the stair step is not always ideal. So we do tend to have a lot of trading structure before entry. So when we enter very, very close to the structure that makes up our breaker structure, we tend to get this. Now if I draw this out, we'll see here again we have another volume profile showing the volume traded in this little balancing area. As you can see, what we have is a D-shaped distribution, which tends to mean the market is balancing, so ranging effectively. And you'll see your entry is almost directly into the point of control of this little, it's not quite a consolidation. It's fairly wide, so I didn't notice it initially. But what I've found is price often, particularly if we trade very close to it, does this, and then it rejects, comes down to, it either goes completely in the other direction, or particularly when the FEG is bigger, it'll come down to the bottom of the FEG and then go. Now, that's something I noticed in a number of my trades. You'll see what actually happens if we start playing this out. The first bar is fairly stunted, and look what that second bar does. rejects exactly on the point of control. As we watch this play out, you will see it rejects, not too hard because it wasn't enough to stop you out, and continues to consolidate around this point of control. And watch what happens in a bar or so in a bar or so's time. Consolidating around the point of control. You'll notice the price is moving again. Let me clear that. Price is moving, give or take, between the value area high and low of this distribution, and you could almost trade it top to bottom if you're really brave. Now watch again. Now watch what happens. A couple of bars and bang. See it. Notice how the point of control for the day moved from there to here. We now have this price 35.29 now represents the price of the most volume trade, price level the most volume traded at through the entire RTH session. So you can really expect price to chop now here. So it is either quite likely this is an indication it's a very good idea to get out of your position, as you're very likely going to have a chop, could be a break up, could be a breakdown. It's a pretty poor location to be in a trade like this, particularly when your expectation was here that we reacted to theoretically large orders here, mythical I'm going to say, and ought to move up relatively quickly. This chop is not good, which you can I reckon, my opinion, that these high volume areas that we've had here and here are the reason you were getting this chop. Now, if you look, so I've seen this, and yeah, I've seen this on a number of trades, and it's something I tend to avoid if there's a consolidation, especially a tighter consolidation like this, and I find that my entry is going to be right into that point of control. I avoid the trade. I think it's maybe a drawback of the TTM model, quite a big one, potentially, is because we need this structure with the breaker structure and the return, we tend to get more, we can have entries where we get a lot of, we enter directly into consolidation. So, not sure. It's usually, so it's perhaps better when we can enter a fair bit lower behind the consolidation, underneath the consolidation, to be away from this. One of the other things I dislike that I find happens is, which again is nothing we can do, we can't really do anything about it because it is the strategy, but because we need to wait for confirmation, I often find our reaction bar is not necessarily too large, but you don't get much more from them out of the move, particularly when we trade into consolidation like this. So we get a tiny bit more and we come down and it's a stop loss. Whereas I've often felt, if you were to be able to get in on this little doji here, which is not which, if this is a loss, everyone on the group will be, but it's a doji and it's all spiky, man. So, and they're not entirely wrong because it hasn't shown a reaction yet. But if you were able to enter here, you would have been able to work and exit. Even by here, you could already be in the money. If you have a look here, if you had I don't know what your stop would be, not a great stop. But by here, and with a stop like that, you could already be up. In fact, that would be, yeah, that could be your target. Your target is 2R to begin with. So, you see, you could have been, if you could have gotten in on this doji, you could have taken your profit by that point of control. So it might be something to consider, look into trades, especially on the shorter time frames and in the futures, to see if you could get in closer. Now, I wanted to point out one other thing. We go back down here to the trade you pointed out that you want to take, and I said it was a banger. First of all, I realized I made a mistake. This is not a TTM trade because there's no breaker structure. Market comes down, comes up. We don't make a low, we don't break below here. We just go up normally. This is just a normal, nice banger trade. There was your area. There was a very nice support level there. But again, you see, although obviously I can draw volume profile over this, where is it? And you'll obviously have some volume and some point of control. A, the point of control is further away, but B, this isn't really a consolidation. It's a couple of bars. It's a very tiny consolidation. You can't avoid every possible consolidation in the market. So this makes it a lot better. But you see, unfortunately, it's not a TTM trade because we don't have that structure. So it's maybe a bit of a catch-22. But I mean, this was the area. Market is on its way down. That would have been a great trade with a sell stop below this bar. So I think that's basically all I have to say about that. Don't really know if it's helpful to you, because in the end we can end up looking for too many ifs and buts to try and filter out the losses. But we get a lot of trades in the strategy that just start going and then turn around. And this trading directly into a consolidation and into the point of control of consolidation, it's definitely something I found that have in common. Not always. If you look at the video I did on Friday with that EU trade that I didn't get in on, it was a terrible one, trading directly or pretty close into a point of control. That Fed was far away enough that you could have worked an exit. But maybe it's just an idea, something to think about. In any case, hope that helped. That's all I've got to say. Cheers, man.